Mic check, mic check, mic check, 1, 2, 3. Hey everybody, welcome to Trading Capital's live stream. Today we're going to be discussing the S&P 500 sectors. We'll be going through all of the 11 sectors of the S&P 500 plus more. You'll have a chance to ask me some questions. We can pull up some individual tickers. So really we're just going to take the stream casually slow since it's not really any pressure with trades or anything like that. So we'll just sit back, listen, observe. If you have any questions along the way, feel free to put them in the chat. But we'll get started. So first things first, starting with the materials sector. Overall, the materials sector is at an interesting spot. If we flip to the XLB chart and pull that up, you can see materials year-to-date performance is sitting roughly at about 6.8%. So that's a pretty obviously it's a positive move for that sector, but it's underperforming the S&P 500 in a fairly big way. So relatively speaking, materials are still weak, even though the chart on the XLB ETF is actually looking fairly strong. Let's just flip this index weighting so we have the highest weighting. Obviously, in paying attention to some of these stocks that have the heavier weightings are very, very key to understanding how capital is rotating. Often these names that have the heavier index weighting sees really, really big bounces off of technical support. So if we flip back to the materials sector here and look at what's happening on the daily chart, actually looking at a few different time frames on my other screens here. So I'm looking at the daily, the weekly, the monthly, and the 3-month chart on my other screens here. But just dissecting the daily, obviously we're at a pretty key inflection point. You've had this beautiful technical breakout from these pivot highs over here on the materials sector, pivot high to pivot high, right through this pivot high here, impressive breakout to the upside. We're just in now a consolidation digestion pattern. Obviously we have a potential here for a lower high in place, which makes me think that there's always a scenario you can retest the previous support zone. So obviously major support for this sector is going to be at 87.46. If you lose that daily chart support, then you're probably going down into the region of around $83 and change. So obviously materials have had a stellar breakout. Even on the weekly chart, you look at this particular sector, it had a really, really strong move, and it's just going through a bit of a consolidation phase. So at this point, it's not really a short, in my opinion. I do think that there's a scenario it can actually go a little bit lower. You're getting a little bit of a temporary breakdown in the RSI, but there's still going to be a ton of support. Keep in mind, we're just trading into these previous pivots here, and you can see the consolidation has really just been in this zone. You've tested this previous high price in January 2022, tried getting above it here on a weekly close, no confirmation, failed, and now you're looking at another attempt here, which slightly got rejected. So I'm paying close attention to this high pivot on the materials sector. Any sort of weekly closes above this area, you can look for long continuation moves. Any sort of weekly closes below, I still think shorts are favored off of this zone until we prove to get above that area. You can even use it as a daily closing basis, that previous high pivot, because you can see the price action here. Got a daily close above, confirmed daily candle above, then you got rejected, 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 big sell-off. Now you've come up to test it again, and you're getting rejected off of that previous pivot high. So again, shorts are favored at this region until you start getting above it in the near term. All right, let's move along to the next sector here. So we're going to look at communications. Obviously, communications is important because it has that mega cap exposure. This sector has been nothing short of a one-way freight train to the upside ever since Meta put in its huge, huge reversal. Communications have had a really stellar move to the high side. Let's look at the communication services here. So again, the S&P 500 is up about 11.21. Communications sector today is up about 14.16%. So there's clear outperformance in the communication sector as we speak. If we look at the index weighting, obviously Meta holding a whopping 22% index weighting, even higher than Google, almost double Google's regular shares here. But also important to look at Netflix, EA, T-Mobile, AT&T, Verizon, Comcast. So there's been clear outperformance in Meta in this particular sector, which is obviously, since it's had the biggest weighting, it's had a really, really substantial move. So year to date, the communication sector is outperforming the S&P 500, which is very, very bullish. Its market cap weight right now is about 9.27% of the S&P, about 6 trillion deep, so fairly decent size in terms of market cap weighting. If we look at what's going on in the communications daily chart here, overall the communications, Meta, Google, those are your pretty premium important mega cap names to pay attention to. But when we look at this sector, again, you're trading into this double top resistance pivot. This is your recent swing high pivot, which obviously saw a pretty big reversal off that zone. But then we've capitulated and carved out a pretty impressive high volume bottom here in the communications sector. So Meta obviously got hit on its earnings and has started to actually move up with pretty sheer force. You know, look at that. It's almost recaptured its entire down move. Sorry, just sipping some water. So it's certainly impressive to see Meta still performing extremely, extremely well here. If I pull up the Meta chart on my other screen here, I'm just looking at a couple key moving averages. You're at a pretty important inflection point. On the daily chart, you're trading below the 50 moving average, the daily 50 moving average. On the weekly chart, you just got a bullish close back above the 7-week moving average. So you're shaping up for a potential short-term bearish crossover of the 7 and 20 moving average on the weekly chart. And I'm just looking at these on my other screen, but that is trying to be negated. So right now, Meta is trying to reverse its bearish trend in the short term and is still showing resiliency on the long-term time frame. So these long-term time frames on Meta are insanely bullish. You know, you look at the monthly chart, bullish. Potentially some near-term weakness in the weekly, but with this recent weekly close, you did get some more positive strength in the market. I think the big level technically on the trend line chart here, if we look at Meta on the weekly chart, and I'll show you these two trend lines we're still trading into. Again, this is a huge confluence zone on Meta. We look at Meta and you see this previous high pivot trend line all the way back in 2012 connecting through this massive zone all the way back from your pivot high in 2021. So I think if Meta can start to recapture that trend line, this lower boundary one, then you're probably going to look to push back up and recapture this area. So that being said, if we look back at the communications ETF, XLC, and obviously Google is pretty important to recognize in this name, which we can also take a look at. The weekly chart right now is not looking bad at all. You know, this name has now had 2 weekly higher high closes from your previous little dump candle here, your negative down move. This is your largest down move in the week, and you're now above that candle. So this was kind of your big technical breakdown where a lot of investors capitulated. Obviously, you had this huge weekly reversal candle on XLC off of Meta's dump, but higher weekly closes on a consistent basis is looking extremely positive for the sector. And with what's interesting, again, you have the market, the S&P 500 and the NASDAQ have put in higher highs, all-time highs, right? You look at communication sector and you ask yourself, well, going back to our previous little chart here, we look at the communication sector and it's actually outperforming the S&P 500. So, I mean, comparing the communications to the S&P, it's about 14.16% year to date versus the S&P 500 at 11.21. And then when we flip back to that communications chart, it's interesting to see that communications still haven't broken that previous 2021 high pivot, whereas the markets, the S&P and the SPX, have clearly traded above its previous all-time high pivots in 2022 there. So it leads you to think, are some sectors going to see more capital rotation? Can the communications sector push back up to its previous all-time high pivot? We just have to certainly keep an eye on that because this is still the leading sector at the moment and it's outperforming the broad market in a pretty decent way, and it still hasn't really tapped that previous 2021 high. So if Google and Meta continue to firm up here and press into new highs, this sector still could be in for a little bit of upside in the near term. So communications obviously see heavy money flow when the market is in a bit of a risk-on environment. So keep your eye on this one. Any sort of break above this high pivot, I think you have a very, very quick squeeze, probably about to this 86, your previous all-time high. You can clearly see the channel that you've been chopping in. I'm looking for another retest of that upper boundary channel, considering that you've had a really, really sharp sell-off and you've recaptured all of that. It's looking likely that communications press higher. So Meta probably looking to challenge and fill its near-term gap to the upside. Google, maybe you see a bit of sideways choppy price action in Google. It's a little extended in the near term at trading at some all-time high price. All right, let's move along to the next sector here, guys. We're going to look at energy. And again, just keep some tickers in mind. We'll have a chance to discuss some other names at the end of the run-through. So looking at XLE. XLE has gone through a bit of a decline, so obviously impacted by oil-related stocks. You know, I still like oil-related stocks in regards to XOM, Valero, but we have to pay attention to what happens next. So the daily trend on the daily chart is broken down. The weekly trend has also seen a bit of weakness. It's still holding technically a little bit of bullish structure, but you are trading down and potentially having a bit of a failed breakout here on the weekly chart. So monthly chart still a little holding an inside bar monthly breakout candle, but you have not confirmed that breakout candle just quite yet. 3-month chart, a little bit of price action coming in. So ultimately speaking, it does look like energy is trying to break down here and go a little bit lower. We are just chopping in this channel since we had a little bit of a breakout out of this channel, and you're going to see this channel like this. Let me just tighten this up. So clearly we had an attempt at a breakout here and it's been rejected. We're now back inside the channel. If we lose this low pivot here on the XLE and get, you know, a couple daily closes and more important a weekly close below this low pivot, you're probably going to have a flush down to the lower boundary range here. And that could coincide with a bit of a decline in oil. And one of the reasons, you know, oil's trying to hold some technical structure here, but it has started to potentially trigger and test a little bit of a neckline zone here. There was a head and shoulders on display here which triggered, and then you had a bullish reversal back up to the high side, which actually negated the near-term bearish pattern. So as of now, if you start testing and breaking this key neckline, then I think oil's probably going to head to about $74. You even have a much, much lower downside target. If this pattern, this head and shoulders was to play out, you're looking at a move down to about $66 in WTI crude. So, I mean, right now, oil's at a key inflection point, and we have to be very, very careful with what happens here because the market is trying to continue to push and press higher highs. Obviously, we'll discuss NVIDIA and some of the semiconductor names, which are still showing some strength across the board and putting in new all-time highs. But if we have a scenario here where we have oil actually break down and trigger this head and shoulders, I mean, you're going to have a lot of support at 74, I do think. However, since we've been consolidating here bearishly, since we broke down from this little mini head and shoulders here, left shoulder, head, right shoulder, if this consolidates more, you could actually pierce 74 with a pretty big degree. And the importance of discussing oil and following this is that if oil starts to decline precipitously, that's like adding fuel to the fire for the markets. The markets love a very, very low oil price. You think about how many companies in the stock market are responsible, whether they're directly responsible for buying oil or indirectly responsible for consuming oil. Low oil prices generally mean higher S&P 500 earnings, lower input costs, higher profits across the board. So the stock market loves lower oil prices. And then you factor in, you know, the market is on a bit of an oscillation right now with inflation. Are we in an inflationary environment? Technically, we're still inflationary above the Fed's 2% target, but we've been in a disinflationary trend since we've come from that peak of over 9% on the CPI. But still well above that 2% mandate, still above 3%, but looking to trend lower. So if oil breaks down, it not only helps the S&P 500 companies, but it also helps the inflation expectations lower, which inevitably lowers the interest rates, and then that also increases a bit of the extra froth and momentum in the market, because lower cost of capital generally means higher profits for these companies, and you start to see other short-term riskier assets in the Russell 2000 small caps also outperform. So again, we're at a key inflection point. Obviously, you want to give oil the benefit of the doubt at this key trend line. If we look at the weekly chart of oil, this is not no Mickey Mouse level. This is a pretty big level right now for oil, and the reason being is it's a key trend line going all the way back to your COVID low pivot, connecting through this massive consolidation here in December, January, February, oil traded into. And then we look at where we're at now in the cycle, and you're still trying to put in higher lows. So you haven't put in that true higher high yet. You still have your high, your lower high, your lower high, your lower high, but you're forming higher lows. So you're creating this very, very bullish, or it could be a bearish, it could be a bullish, but you're creating this very powerful long-term wedge pattern. And whichever way this wedge pattern either breaks down or breaks out, it's going to be a very, very powerful reaction. So my base case is, we may see a little bit more oil weakness since we are trying to trigger bearish pattern, but I still think that this is at a bullish level where you've seen massive previous support zones. I think that as long as we stay above this neckline, I'm looking at buying oil here and expecting a bounce. If we start breaking down, then obviously 74 and potentially even as low as $66 target is on watch. But I want to respect oil's price here, and I'm looking to buy. And I do think that XLE obviously could be at a near-term precipice of declining very, very sharply, but there is a decent amount of support in this range, and we just have to wait and see based off of what the commodities do and oil does. So obviously commodities across the board have been hit pretty hard. We look at natural gas. Natural gas has obviously seen a bit of a pullback. So commodities across the board have seen a little bit of a pullback. Even copper took a bit of a decline. Uranium has pulled back into some support. So realistically speaking, commodities over the last week, although a lot of them were strong, they've been hit. They saw a decent amount of sell-side pressure across the board, whether it was oil, nat gas, uranium, the metals, copper, and you go through a few other ones. So it was a down week, but ultimately commodities are still in a very strong uptrend, and I still think that there's more upside across the board. I mean, we look at this DBC ETF, and to me, this is still a very, very structurally bullish pattern. You've broken out of your stage 1 basing formation, which was here. You had your beautiful check back to support around this 2260, power move up, bit of a rejection here, but now you're carving in, you had this consolidation. You're putting a nice little V-shaped low pivot, which could be even a bit of a header, a little bit of an inverse head and shoulders here. So I still think that these charts in the commodity space are just going through a bit of a consolidation, which some of them are needed. A lot of them had stellar runs, and I'm still expecting a bit more upside. If you draw this pattern here and DBC breaks out, this commodity-based ETF, you've got a couple mini bullish patterns. You got a nice little weekly flag pattern here forming a couple daily inverse head and shoulders. Then you also have a potential weekly inverse head and shoulders forming on this DBCF. So I still have to remain slightly more bullish on commodities. Couple questions there. I know this on, if you look at the SPY weekly chart, there is major resistance, 3 high pivots, 2007, 2021, and hopefully 2024 as I'm heavily short. Do you think this weekly high sloping trend line is strong? So I see this trend line right now. Obviously, this is a bit of a weekly chart trend line. Pivot high, pivot low, pivot low, pivot high, we're hitting right now. So we obviously got daily chart rejection off of that level. That was clear and evident. That was definitely clear and evident. So very, very sharp daily chart rejection off of that near-term level. Let me just pull it up on my other chart, make sure I want to draw it right before I put it on the screen. So you're looking at a 2007 pivot, 2021 and 2024, eh? Okay, we'll go back to the weekly. Maybe we go the monthly. It's a far date and time. So if I draw my channel tool, something like that, I assume you're looking at. Let me just make sure I'm intersecting here perfectly. So yeah, that resistance is valid. That's a sharp trend line. That's a very, very long-term trend line. I mean, I'm trying to use the exact pivot highs here because often the market likes to pierce levels instead of getting rejected right at the levels. Often market makers know these trend lines exist and they like to pierce the levels because people keep their stops very, very close. So I mean, right now, if we use that exact pivot high, which is roughly about there, and we zoom this in now on the daily chart and see if we've actually tagged that trend line, you can see that there might be one more little final squeeze into that area. Obviously, this trend line is a long-term monthly trend line on the SPY, so it should be very strong. Yes, it's very strong, and that's why you've seen this heavy reversal bar off of this zone. And to keep in mind, I mean, this heavy reversal bar happened on the back of strong NVIDIA earnings. So, I mean, it wasn't like the bellwether stock, the stock that's leading the market, sold off. The stock that was leading the market was actually up firmly. I mean, off of a huge gap up. Most people thinking NVIDIA up, 9-10% on one gap up session on earnings. Everyone would be full port calls, thinking that this name is just going to lift, the whole entire semiconductor. And believe it or not, I thought it was also going to lift some positions throughout the day, more so than what happened in the market. I mean, you had a massive sell-off and reversal across the board. Even with NVIDIA up 10%, you saw the S&P and Qs sell off sharply, and that was that heavy reversal. So we are into this long-term monthly resistance trend line. Just understand it on a daily chart basis. You could still wick through that area, but as of now, yeah, you want to watch that trend line very, very closely because it's confluencing from a long-term basis. It's also confluencing with this little bit of a trend channel. You have that exceptionally strong weekly RSI divergence. I'm going to keep harping on this divergence, guys. I mean, it's very rare that the markets, when you look at the weekly RSI, it's this technical structure of this market is set up extremely similar to what happened during this COVID phase, especially since you had, a very extremely overbought RSI on COVID. You had this pullback, which broke that lower boundary yellow trend line, just like we had here. Then your bounce in the market put in a lower high again on the RSI, but a higher high in price action. Look what happened in COVID, a lower high on the RSI, but a higher high in price action right before the dump. So I mean, when you approach a technical setup that is almost identical to the COVID setup here, again, I'm not saying it's COVID or another pandemic is going to start. That's the farthest thing. I'm not going to say we're going to have this huge capitulation event. We could, but you just want to be, mindful that there should be a decline off of this long-term monthly resistance. But remember, it's monthly resistance. So the decline doesn't have to happen over one day. It doesn't have to happen over 1 week. This is monthly chart resistance. So when we pull up to a monthly candle, we could go through a big distribution phase here in this range. It's a monthly resistance. So sellers could be obviously buying up here, but the long-term investors could be selling up here. And then eventually once one side wins the battle, then you can break down. So, I mean, we could consolidate in this channel here up here for 1 to 2 months before we even have either a breakout again or break down. The market doesn't have to sell off instantly. Although we did get harsh rejection on the daily off of this candle, it doesn't have to break down immediately. So we're still putting in higher highs. We're still trading above technical support. Obviously, if we start losing this 524 on the SPY here, this previous pivot, then we got to look lower for your next previous high pivot, which honestly, I mean, is a pretty big level that you could fall down to. If we start losing this previous 524 level, you could have a pretty decent sell-off in the market. But as of now, you want to respect that the S&P 500 is still putting in higher highs and is still trading into above this key level. But obviously, having a higher net short exposure, Hassan, is probably a good risk to reward ratio at this area. Again, my positioning, I'll be transparent here, is obviously net short myself, but I do have some long exposure. I think it's important to recognize that the market, although when the broad market, the S&P, the indices, the Qs, the Russell all sell off, we still need to recognize that that other parts of the market can still rally. Capital, yes, flees often in times of sell-offs, but there's still things that will perform. A couple of the questions there, I know Bart was asking if oil keeps falling, it's not good for our XOM position. So you're right. If WTI crude falls and triggers this head and shoulders, it's not going to be good for our position. Granted, we had an exceptional fill when we entered on XOM. So even with the decline in crude, could I have taken profits around this low pivot wick where we bought in? Sure, I could have taken some profits off of the table. I mean, we did take some profits on the call side, both on XOM and Valero, which we've already secured on the energy trade. But I've just accumulated down at this lower pivot on XOM, and that was our first entry. So, I mean, even with the sell-off in crude, XOM has basically just recently broken this low pivot here, but crude has actually been putting in some lower highs here and potentially a bear flag, but it hasn't broken it. I'm still believing that this support can hold in the near term. I think that this support, how I could honestly see this shaping up, is I could see crude bouncing all the way back up to about 81 and then maybe having a rollover to 74 and then trying to have a bounce back to this area, 78, and then potentially if this head and shoulders triggers and continues to go lower, you could want to retest that lower boundary target. So I'm not really worried about my XOM position, even if we break down from this area to 74. $74 is a whole host of support as well. That was my lower boundary bear target. When I did some calculations before we were in this little bit of a breakout phase, my lower boundary calculation was 74. My upper target was 90. That was my target 2. Obviously, we hit our target 1, which was 84. We hit that to a T and then some. But I still think that we're in a good position here. We just started accumulating XOM, basically about almost a couple weeks ago now. And even though we're slightly down from this little bit of a low wick here, we're still able to accumulate this position at the next key technical levels. I'm not too worried about this one. Even if it does decline, I'll look to potentially add to my position. And I'm just trading common shares at this point in time, but I do think that if oil starts to decline more, you better watch out for some of these tickers, because some of these tickers on the call side, I think oil will get an extremely big bounce if we do have a technical breakdown to 74. You look at this parallel channel again on XOM, your next buy point is probably sitting somewhere around 110. Let's see if there's any Fibonacci levels that correlate to that. And again, I still like the energy trade. I mean, you look at this fib level, 109.87, kind of correlates to that 110 price target. So, I mean, it might even be at that 109.87 where you get your next buy entry. But again, we just entered. I'm not too worried. I think oil's at technical support. We're just going to wait for more data to see if it gives us a bit of a reversal to the upside. But I still like the energy trade at this point in time, even though there's a potential for a short-term bearish breakdown. Hassan saying, I think crude will fall because of less demand, coming recession. Yep, that's a good thesis. We have been in a tightening cycle. You've heard the argument where yields lag the market. But ultimately, I mean, the interest rates have been tight for quite a long time now, and the market is still holding. The jobs market, the employment market is still holding. And you really haven't had a technical breakdown in GDP. You factor in where GDP's been revised from. GDP is actually elevated from January revisions. So, I mean, you had a small decline in the forecast as previewed from the Atlanta Fed, but GDP is still showing strength and the labor market is still showing strength at this point in time. So I really think that until you get a definitive crack in the labor market, crude still has some bullish bias. Don't be so quick to short this commodity. Again, I touch base on what commodities are doing right now. You look at this little bit of a consolidation phase this DBC ATF is going through. You look at some of the consolidation phase that uranium has gone through. You look at the little bit of a distribution phase that gold and silver are going through. Gold's been taking a little bit of a decline as well. You look at copper recently. So over the last, 1 to 2 weeks, you've seen really, really stellar performance in commodities, but you've seen some consolidation within the last week. So if the broad commodity market has been under pressure in the last week, and you have some of these key commodities trading back into some support, you just want to expect a potential bounce, right? Sure, you could still break down, but what's to say you can't go right back to the high of this range off of this bear flag? You push back to 79 and looking for a potential break to 80, then you're going to have a lot more bullish flow coming back into the energy sector. So don't be so quick to think this bear flag is triggering just yet. Obviously, anything can happen, but I want to respect that crude is still putting in potentially higher lows here. Okay. All right, let's move along to the next sector here. Yeah, it's a strong bear flag. And you see all these bottoming tails? Bottoming tail, bottoming tail, bottoming tail. I mean, there is some signs of accumulation. You have a pretty strong, look at this little bit of a divergence that is forming on the crude chart. So you've put in your low RSI, which was basically on this, let me actually just mark it here. It was basically on this candle here. Then ever since you've been putting higher highs on the daily RSI, but you've been putting in some lower low price action. So there's a little bit of a divergence, a positive divergence occurring here. And then simultaneously, let's get rid of this bear pattern. I think, a lot of the times we can easily see a potential head and shoulders or a potential inverse, but we often miss other candle formations. So if I have to go through this crude oil chart, just give me a second here. So if I remove all of those necklines, one could also say there's a bit of a bullish pattern developing here. You can see this little bit of a falling wedge potential. There's a bit of a falling wedge potential. So, I mean, this type of pattern can be pretty bullish, a falling wedge pattern. And look at this. I mean, this falling wedge pattern identifies potentially a little bit of almost a fake peekaboo breakdown of this trend line. Almost could tap the $74 target, and then you could have a bullish breakout. So just because there's a head and shoulders pattern here doesn't guarantee that that's going to play out. There's also a very strong chance of a falling wedge pattern that's holding higher low support when you have commodities still surging and breaking out. This still could break out. So, I mean, as much as there's a bear pattern, there's also a potential bull pattern that just needs a little bit more data. So right now, if this wedge pattern breaks out, you're moving back into this $83 target, high 82s. And then obviously you have your higher end of the apex here approaching that August time frame. So it's going to be pretty imperative to keep an eye on crude because that does impact the inflationary expectations. I'm not sure if I should ask you here, what do you think about CVS? It's sitting on a weekly trend line that dates back to 2023. Let's look at CVS. Just give me a second with this chart. Just 1 second. I'm pulling CVS on my other screens here. I'm doing a bit of work on my other charting here before I pull it up. Obviously, I have looked at this name before. I understand it's been through a pretty harsh decline. All right, so CVS Sorry guys, I had my my mic muted there. So I'm looking at CVS here on my other chart. And I'm just pulling up multiple time frames. So the daily chart on CVS points that we're going to go lower. There's a bit of a bearish divergence on the daily chart RSI that points to lower price action. So you want to see CVS make a lower low now on the daily chart, but maintain a higher RSI. Okay? You want to see a lower low on the daily chart, but a higher high on the RSI. The weekly chart does have a positive divergence forming, but again, it's not really one that looks like it's going to hold. It does look like we're probably going to break it and go lower. Monthly chart, obviously everyone can see this trend line going all the way back to 2003. What I've done now is pulled up a fib retrace from that low in 2003, pulled it all the way to the high because this is the trend line in focus right now. I do think that we could even break down and test this previous little 618, 50.24. There's going to be a whole ton of support there. So what's also interesting is if you throw on, and I'm looking at the 3-month chart now. If you look at the 3-month chart, so this is really, really long time frame in focus, right? But sometimes you have to do this. When stocks go from, have these crazy, crazy moves, big drastic declines, don't be afraid to, go to the 1, 2 month, 3 month, 5 month, 6 month. Just play around with it. Multiple time frames. The more time frames you look at, the better the understanding you get. So take a look at this trend line. You're approaching the monthly 100 moving average. That just so happens to correlate right above that 618. So what could happen here is we don't even have to break this key level. Obviously, we all know we're sitting on that long-term trend line on the monthly chart. So we want to respect that support right now. I do think that you could buy it, but the daily trend is still pointing a little bit lower. I would look to be a big buyer around this 50-50 level, this 50.47, this 618. But right now, that's a decent looking chart. It does look like for a longer term position, I do think that it's in a bit of a vicinity where you probably could accumulate this for a little bit of a long term portfolio. A lot of people are going to be looking at a head and shoulders up here that's triggered. Then a lot of people are looking at this head and shoulders that just triggered and broke the neckline. But when you have these massive technical breakdowns in names that are still obviously have good business models, still generating money. Obviously, CVS is falling off a bit of a perch. New health laws in the States, insurance, yada, yada, yada. But these names are still strong S&P 500 companies that are likely going to still stick around, and they're just going through a bit of a discounting phase until they figure out how they can go back to the old ways of generating more income and revenue. And obviously, with political change potentially on the horizon, things can be shaken up in ways that we don't expect. The bear side of this chart is obviously this head and shoulders on the monthly chart. Takes you down to about 28, 27. Do I think that's going to play out? No, I don't. But if we start getting some bearish closes on a monthly chart below the 618, then yeah, you want to start looking at potentially a $32, $33 price target. So as of now, long-term support is being held. I still think maybe a little bit more of a dip lower, creating a lower low on the daily chart. Again, I'm looking for this price on the daily chart to dip, make a new low, break this low pivot, but maintain a higher high. Okay, that's what I'm looking for this name. That gets me interested. Even better if it were to flush into the 618 zone down here around 50.17. Hopefully that helped there on CVS. All right, TC, what are your thoughts on NVIDIA or when China invades Taiwan? Obviously, there's a lot of news right now that's going on with China potentially just flexing their muscles, doing a lot of what they call practice drills just off the coast of Taiwan in the open waters there. The concerning aspect, about the whole China-Taiwan, obviously it would be a much, much easier attempt for China to try to invade Taiwan on their own terms and take it over. I do think that an aerial, naval assault with China having a much, much stronger military presence, it would obviously mean World War III. So it's not something that you want to try to be betting on and making money, because World War III really isn't good for the whole global population. I mean, you just don't know what's going to happen. A lot of variables. So hopefully that's not something that no one wants to try to plan for the end of the world unless you're some of these rich billionaires that are buying bunkers. But no one really wants that. My thoughts on what would happen to Nvidia and Taiwan Semi. I mean, the logical thing, you would think that Taiwan Semi would absolutely implode, right? That's what the expectation would be. Obviously, if China is taking over Taiwan Semi, it would probably implode. But I don't think that the U.S. would want to allow that very quickly. So maybe it becomes a form where the U.S. tries to extradite the whole Taiwan Semi facilities, bails them out somehow by the printing of more money, and buys all their IP and intellectual property. Maybe they save Taiwan Semi and move them. Who knows? But at this point in time, it's such a difficult thing to speculate on. The logical thing would be bearish, but just the way the stock market moves and how quick we are to send aid, financial aid, war aid. We did it to Ukraine. We've done it with Israel and Hamas and all the conflict in the Middle East. We're so quick to write pretty much blank checks when it involves any sort of war or escalation in tensions. Really, money doesn't matter. So that's the bullish side about conflict, is whenever there's conflict, the checks start being written, and it typically can ultimately cause a little bit more of buying pressure in equities. But again, I would naturally expect the markets to have a pretty sharp decline across the board if China was set to invade Taiwan. If we woke up, Monday, obviously Monday the markets are closed and Taiwan was being invaded by China, I think Tuesday would be an absolute bloodbath in the markets. That's my expectation. Now, looking at Taiwan Semi, obviously you've had bullish price action, higher highs, you've negated bearish price action. This chart is just unrelentlessly strong. I mean, just a massive, massive surge. Such an exceptional strong weekly close today. I mean, look at that weekly close on Taiwan Semi. Not only have you broken that double top, you've broken this high pivot reversal where you saw some sellers. So this chart is looking like it wants to continue to press a little bit higher. Obviously, it's kind of moving in lockstep with Nvidia. So this chart is moving in absolute lockstep with Nvidia. The thing about this chart like right now is you really don't even have any resistance trend lines. You have to really zoom in. Let me see if I can see anything on my screen since I have bigger monitors here. Just give me a second while I work with this chart. There might be a trend line here on the monthly that we're hitting into. So I'm looking at the 3-month chart, and I see a high pivot going all the way back to 1999 or 2000. So yeah, I mean, right now, I'll show you this trend line. That's pretty fascinating. I'm glad we actually looked at this chart. All right, take a look at this chart, guys. Look at that Taiwan Semi trend line. Look at that thing. Your pivot high all the way in 2000 to your pivot high here in 2021. This is a 1, 2, 3, 4, 5, 6, 7 consecutive higher monthly closes. I mean, higher high, higher high, higher high, higher high, higher high, higher high. The buying pressure has just been relentless. I think the last time we saw 7, let's see what we saw here. 1, 2, 3, 4, 5, 6, 7, 8, 9. So this previous rally we saw 9 consecutive months. If we actually do a measured move from this low to this high, that was about a $99 move, just under $100, 232%. Let's see what we've done here. Wow, guys, take a look at that. So not only do you have a beautiful trend line, long-term resistance trend line on Taiwan Semi, but you also have a bit of a measured move, an exact $99 move on each low pivot, swing low to its swing high. Swing low to swing high, $99. So you have a beautiful measured move. You have a bit of a candle count going on, an extension, an extreme overbought condition. So, I mean, you would favor a pullback. But just keep in mind that even when you got this overbought signal on the RSI on the monthly, you obviously got a pretty big pullback over several months, which looked like it was bullish consolidation here on Taiwan Semi. And then you got almost a little bit of a hoorah rally, which made a new swing high, all-time high pivot. And then once you put in that bearish divergence on the long-term trend, you just had an absolute massive technical breakdown. So expect Taiwan Semi to potentially go through some sort of a consolidation phase like this, and then potentially make a little bit of a hoorah attempt at getting through this area, and then maybe we see another sell side day. So it's not going to be a straight shot rejection. Obviously, if we identify the range that we traded in here from this high pivot to really your low pivot, you can see that, there's still a decent range to trade. 24% range is a really sizable range. I think that you can easily look for shorts if we now reverse off of this high pivot, even using this little bit of a weekly reversal on Taiwan Semi, which we're now trying to get above on a monthly basis. We'll know in 5 days what the monthly chart says, but if we use a very similar range in and around the range of 20 to 25%, where you give yourself a little bit of a buffer, but basically accumulate. Whenever you see a 24, 25% sell-off, you look to start buying the low end of the range. And then same thing, you could look for a little bit of a bounce back up to the high, sell at the high, short the high. So as of now, I think that once we get a bit of a stronger reversal signal on a weekly chart or even this monthly chart, then we can identify a bit of a range here, whether it's a 20 to 24% range, kind of similar to what we saw here. Even if you extend this forward and use this previous range as our consolidation support, you can start accumulating at the lower range of around 24% if we had a decline from here. And then you could also just understand that you need to maybe potentially add at the lower boundary range here. But as of now, a bit extended. I would favor shorts into this region on Taiwan Semi. That's an extreme chart. Let's look at NVIDIA and see if there's any other charts that are kind of showing any similarities, but I really don't think so with NVIDIA. I think it's kind of in a world of its own. I don't think there's even any resistance targets in place. Yeah, there's nothing I'm seeing here on NVIDIA. It's just a monster. There's absolutely no resistance right now on NVIDIA. Let me check this weekly chart out. You're above that resistance. Really, the type of move that we're seeing in NVIDIA is quite incredible. Let's see this. Weekly pivot high here. Really the only one is if we go on the weekly chart, I don't think that monthly pivot. Let's see this monthly trend line from this pivot high in 2021. So you can see you're even through that on a monthly basis. You're through that long-term trend line going all the way back to your 2021 pivot there. You're through that area on the weekly chart. So you can't really use that. There's a potential that we're wanting to squeeze all the way up to, you obviously have this trend line connecting through this wick high and this high pivot. If you get through that, then your next resistance really lies, call it 1160, 1155. And keep in mind, NVIDIA needs to go through a split, guys. So this is the thing, right? Most retail traders, guys, haven't caught the NVIDIA run. Most retail traders have missed it. Why? Because, over the last several months, NVIDIA has gone exceptionally. It's gone from 500 to over 1,000. And it's an expensive stock. So most retail traders don't own names like this because, even at these prices, even at this dip, still a $750 stock is quite expensive. So, since it'll go through a reverse split, you may get additional small fish liquidity trying to come in. But I think that you need to be very, very careful with buying a name like this up here. Yes, it's showing exceptionally strong growth. Don't get me wrong. The growth in this company is quite impressive right now. At the rate and at the pace, I was even shocked for it to put up 26 billion the other day. So that's an impressive growth rate. Now, even though it's showing an impressive growth rate, at some point it will start to stagnate. And why is that? Well, because you've seen this name just starting to eat all other players' lunch in the semiconductor space. NVIDIA is obviously outperforming the entire SOX ETF. You look at where the SOX ETF is trading, it's still trading inside of its weekly high pivot. You look at names like AMD AMD have gone through pretty horrific declines from the highs, but Nvidia is still making new highs. You even look at, one of the semi chips that was trading kind of in lockstep with Nvidia for most of the time, SMCI, and now it's lagging. So I mean, semiconductors are, yes, they're still the heartbeat of the market, but right now you're seeing really Nvidia starting to outperform across the board, and it's just it needs to be a broad market participation. You want to see Nvidia obviously maintain its gains right now on the long-term chart and the intraday daily, but you also want to see all the other semiconductors start to perform. But the problem with that is the market can only get so saturated. You can't just have Nvidia going up, 9-10% and pushing up each day, as well as all of the other semiconductors trying to keep the same momentum and pace. The market can only allow so much liquidity, and there's only so much market share available. So at some point, we run into a scenario here where how deep is the semiconductor market? How much market share can these names take? How saturated can these semiconductors get inside of our market? And that's the problem, is that you don't want to see a complete saturation, overbought area where valuations can come in across the board. But as of now, Nvidia is still growing. You still want to favor its bullish trend at this point. But its next resistance trend lines that I can see on the daily is really looking at around these areas. The only crazy thing about Nvidia is it is putting in a very sharp negative divergence on the daily chart of its daily chart pattern. You look at the weekly chart, this negative RSI divergence is also extremely big. And you're finally getting to that point where you're also starting to potentially see that negative bearish crossover. So you have your higher high weekly RSI overbought. Big sell move, which occurred here. Big sell move, 4 weeks of selling. Now you've pushed up with sheer force. You've made new all-time highs, but you're potentially putting in your first lower high on the RSI. So I'm watching this very, very closely. And keep in mind, you're still even overbought. Even though this is a lower high on the RSI, you're still extremely overbought in this region. So Nvidia, TSM just needs to be careful. SOXX at a double top, you just need to be careful, okay, with these names. I don't want to be, I don't want to tell you a buy up here, because ultimately I think the game plan is once this goes through a 10-to-1 stock split and it becomes like $106 name, currently speaking, you're going to start seeing retail chase it, and I do think institutions will start to dump into retail. You think about how much institutional buying pressure has been occurred since January here, just pushing this up. Someone has to start taking profits and unloading. Forward expectations start to get extreme when you start going through names like this. And for Nvidia to, keep its growth rate, consecutive earnings report after earnings report, eventually the law of averages come into play, and one of those prints are eventually going to be bad. It's going to be a slower growth rate. It's going to be a lower growth rate. But the question is when, right? The timing aspect is when. But the longer you see higher revisions, consecutive growth rates, beat after beat after beat, it becomes very tough to maintain that current valuation and growth trajectory. It becomes a lot more difficult. Not saying they can't, but it just becomes more difficult. You want to look at WBA, the next ad level. Yeah, this name just keeps being broken down. I still think that this name is due for a very large dead cat bounce. This chart has not been getting any sort of a bid. Nothing. The weekly, let's look at the weekly chart of this name. Just another technical breakdown, trying to lose this down sloping wedge pattern. Still extremely oversold. I mean, you have the next wedge pattern that I'm looking at is this one from this little pivot high in 2021 to your pivot low. You can see the downside target where I'd probably add is somewhere in this 1480 to about $15, somewhere around the $15, even $15 whole number looks pretty good to me at that level. Still an extremely positive weekly RSI divergence. This divergence is becoming massive. Daily divergence as well. Pretty big divergence. Let's look at the monthly chart. Also a pretty strong monthly divergence. So you have the daily chart, the weekly chart, and the monthly chart all showing a massive stream divergence. So I'd probably add my next ad levels around $15 or so on WBA. And again, I still like this name. Even though it's breaking key pivots here, a name like this could still have an easy dead cat bounce back to at least 21 bucks here, this previous low pivot. So I think a name, you could easily see this name back to 21 bucks, and probably within, 2 to 4 weeks, you could see this name have a sharp bounce just with how oversold it is. All right, let's look at MSTR. At the moment, I'm stuck in the middle. So let's look at MSTR. Obviously, crypto's gone through a bit of an interesting phase. Bitcoin at the moment is lagging, but you've seen strength come back into Ethereum. So Ethereum was lagging the entire market. And then obviously with the approval of the ETF, Ethereum had a nice boom, power green candle to the upside. And that obviously has helped catapult the entire sector higher. Just looking at things right now, Bitcoin currently trading at 69,000. Solana's currently trading slightly down. Ethereum still holding. Total crypto market cap at around 2.5 trillion. So crypto has had a nice little breakout. Are you short or are you long MSTR? You're kind of stuck in the middle. It looks like MSTR wants to push back up. This pivot low, breakdown zone. It looks like you want to retest this area and potentially also make a little bit more of a double top or peekaboo. So as of now, MSTR is looking like it wants to press higher. You had a bullish engulfing candle on Friday. Take a look at that. You made a new lower low and you completely engulfed that previous candle. This is looking like a daily chart bull flag. 4-hour chart is looking pretty strong. You got a nice little move above your pre-market high. You even got a nice bullish close above your previous day high. So 93-cent close above your previous day high. That is still, you have to lean slightly bullish on this name. I think what would change my outlook on this area is if you started to get a close back below this trend line. You lost this breakout trend line and you probably look for a lower price. You probably want to buy the lower range. But as of now, MSTR is looking structurally more bullish to move higher. Obviously, it's pending what crypto does. So when we look at Bitcoin's obviously been through a bit of a breakout phase here, still holding its impulse green candle. It's at a key inflection point here. Everyone recognizes the bull pattern that triggered. Believe it or not, the upside really only takes you to about 73.6, kind of into a double top of this pattern. So you can see you've actually chewed through the majority of the upside off of this bullish pattern. And you hit resistance. Pivot high to pivot high to pivot high. So right now, because the pattern that's triggered is bullish, you want to lean bullish. But simultaneously, why we're at a key inflection point is because you're actually back below this key trend line. This trend line triggered a head and shoulders here, and it never completely played out. Now you've done a full-on retrace back to the neckline of the head and shoulders, the bearish pattern, and you're trying to actually lose that area. You got a daily close below, saved it again, but you're trying to lose that key area. So if you start getting daily closes below this neckline, then I think that this pattern could see lower price. Simultaneously, why the 69,000 level is such an important level, look at that pivot high, that previous all-time high pivot on Bitcoin in 2021. That's sitting right at that 69,012 level. So you have a lot of confluence here. You have a lot of resistance on Bitcoin. If Bitcoin can get through this area, honestly, I do think that about 89,000 to 93,000 is in store. This has had a meaningful amount of consolidation on the weekly chart. You have a very powerful weekly bull flag that could trigger here if Bitcoin can get above and start consolidating above this previous all-time high. So right now it's still going through distribution, but it is looking like it's wanting to try to do an attempt at a breakout. And what was interesting was Bitcoin actually was showing more relative strength compared to the broad crypto market, and things are lagging. Ethereum was the crypto coin that was lagging, and now you've had the total crypto market cap firm up, but you still have this resistance at play. You still have the total crypto market cap trading underneath this bearish little trend line. So pivot low, right through this little wick highs where you got rejected, right through this high pivot. You might get one more push up. You might even get a retest of this long-term weekly channel where we got rejected off previously. But look where the total crypto market cap is. It's still trading below its all-time high price. So that is still something that we could test, which is why there could be a little bit more of a squeeze in Bitcoin and the crypto market. you could start to see other altcoins push up, considering Bitcoin's still trading at its all-time high and the crypto market is lagging up. With Ethereum now perking up, if you start to see other coins participate, these could be weekly chart bull flags in the making, but they have not had the true technical breakout signal, even though in the short term they have had a nice move to the upside. So I think, MSTR, I still want to favor a little bit of upside here. You do know that I am holding a bit of a short position in Bitcoin, so that is obviously something that you have to sort of monitor and prepare for yourself. There is still a chance that you could be in a bit of a consolidation phase here and in a bit of a distribution phase. There's a bullish pattern that could be unfolding here on the overall chart pattern. Let me just get out my drawing tool here. But basically how we're going to see that pattern. Where did my tool go? There's my brush. Right now you have a left shoulder. You have a pretty defined head over here. If this is a little bit of a potential right shoulder in the making, obviously you could dip a lot lower. You could even test this previous support zone. But if this chart breaks this bullish pattern, take a look what MSTR is, pointing to. You have an upside move that's pretty substantial. That from that neckline low, depending on where you break the neckline, we'll just go a little bit lower. Look what MSTR is pointing to, about a 2500, 2516 price target. So we just want to respect that crypto can move very quickly. This is showing signs of bullish price action, even though you've seen a little bit of some of the individual names go through a bit of sell side pressure. MSTR is still looking technically bullish as of Friday's close. Nice bullish engulfing candles. So I would still favor a bit of a long zone. Obviously shorts will still likely work off of this 1738 level until we start getting, that hourly close above it. I think it's important to recognize that the rejection off of this 1738 level has happened on an hourly chart basis. Breakout above, rejection, consolidation, breakdown. So any sort of hourly close above 1738, you just want to watch shorts very, very carefully because this could start to squeeze higher. If you keep staying below 1738, I think you can short it, probably back down to this 1530 area. Hopefully that helps. Thank you, Daisy May. Thank you. All right, I'm just scrolling through now. I think another important sector that we have to touch base on is the financials, since we hold some positions in the XLF. So let's look at XLF, and if anyone still has other questions, feel free to take it to mark them down and put them in the question box there. We've been going now for about an hour and 15, so it's a fairly decent sized stream. Hopefully everyone's finding this very, very helpful and useful. And please hit that like button. Definitely check out tradingcapital.ca if you're interested in my membership option. All right, looking at financials. Again, I do think that there's some trades setting up here. Financials have actually had a stellar performance, up 10.66% year to date on the XLF. A lot of that outperformance has come from JP Morgan, but it's still technically underperforming the S&P 500. So financials are still lagging really the tech market. When we look at financials and we go to the index weighting here and we make sure I always like to look at the heaviest weighted names first in these ETFs and then go through. You obviously look at Berkshire, strong as heck, 12.9% of the weighting. JP Morgan Chase, 10% of the weighting. Visa, MasterCard, Bank of America, Wells Fargo, Goldman Sachs, SPGI, AXP, Morgan Stanley. Those are pretty much your top 10 names in this ETF, and they hold a decent weighting. Again, paying attention to some of these heavy hitters here. JP Morgan has been nothing short of remarkable, the price action, but what's concerning for the financials is there's a whole host of resistance here. Bit of a double top failed breakout on the financials. So you can clearly see XLF tried breaking above this key level here. Double top right at that 42, what is that, 42.20, 42 and a quarter. Had a daily chart, strong bullish close, which was met by a gap down and a heavy red bar sell. So financials in the near term have been rejected at a pretty important resistance level. So what's interesting about this resistance level, again, is it also happens to coincide with this key upsloping trend line. I've been discussing this trend line with my members, and take a look at this little bit of an interesting pivot low. So as of now, you're holding this COVID low pivot, through this consolidation low pivot in July, a little bit of a breakdown here, which was saved, retested support, impulse red candle breakdown, a little bit of a back test, which failed, and now we're back into this key vicinity right now. You obviously saw off of this sell a recent decline, but you were able to hold that trend line and you're just grinding. So as of now, you're above it. You want to favor a little bit more bullish price action. However, there's also a key technical level here that we need to watch out for. This was your previous all-time high pivot. As long as we stay above that, you could start to squeeze and push a little bit higher into this 43.50 zone. But if we start losing this previous all-time high pivot on really a weekly confirmed close, you're probably going back down to 36.30. One of the reasons I think that financials, could see some downside is you're finally starting to get that negative divergence on the RSI weekly. Lower high on the RSI, higher high in price action. That is showing us that the trend is weakening. There's this long-term trend line on XLF that is appearing in really a lot of the sectors. You're hitting long-term resistance. Look at this key resistance on the monthly chart. Your pivot low all the way back in 1999 through your pivot highs here, through your pivot high in 2022. So a lot of resistance in this region. We never officially hit that resistance, which is why I was always mindful that financials could have one more hoorah squeeze if the markets push higher. But there's a lot of resistance in this region. There's a lot of potential sell side signals. Even if financials push up to this 43.76, 43.50 zones, I'll be looking to add to my short positions. You look at JP Morgan, which had that nasty bearish engulfing candle in the daily chart off of its conference there. That's not a good sign. Obviously any sort of price action inside this bear candle is inside bar bearish consolidation. You look at Goldman Sachs, that chart is obviously super extended. Hey Michael, welcome to the stream. Thanks for joining. Wheat and corn looks to be building up a big run. We'll take a look at that after these financials. So obviously this is one of the short positions that we're in, Goldman Sachs, into this long-term weekly trend line going all the way back to your 2021 pivot high through your 2007 pivot high. So there's a lot of things here at stake that are showing financials are into a big wall of resistance. A lot of individual names are running into massive resistance. A huge candle count to the upside, an extremely extended RSI in the near term, and you're putting in a little bit of a negative divergence on the monthly. So again, I think the risk to reward certainly favors some of the short sides, but just recognize that there's still potentially one more little move up in financials that could occur in the near term before you get that bigger, monthly consolidation or distribution pattern. So I think financials are a sector that's setting up for a nice little potential short trade. All right, Michael's looking at wheat and corn. So pull that up. Again, I'm going to pull it up on my other screen here as well, just to see. So, daily chart of wheat, Let's go to the daily chart. Stellar price action, a nice little breakout off of the lows of wheat, that's for sure. You can't deny the breakout. I'm just doing some more looking at these other time frames here just so I can give you my opinion. So you've had a breakout from this little bit of a stage 1 basing formation decline, and I think the next resistance is sitting at 683. Currently speaking, on the monthly chart, one of the reasons you're finding some sellers here on the daily is because you're hitting a monthly chart resistance at 650. You're hitting your 20-month moving average at 650. There's going to be some resistance there. Weekly chart resistance is at 682. Daily chart resistance is around that 685. So I think your previous fib level, this fib level, is probably your next target. I do think that this pattern needs to just digest a little bit here, but this does look like it wants to press higher. You've had a nice 3-bar surge breakout out of a falling wedge on the monthly chart. So it is looking quite positive for a continuation move. It's a solid breakout on the monthly chart. 641 is your short-term 7-month. So on the 3-month chart, you're actually hitting a bit of resistance here. It's your short-term 7-day moving average on the 3-month chart. But a nice falling wedge pattern breakout. Again, look for at least a fib retrace to about 680. The way commodities are squeezing, guys, you look at how you look at the decline that wheat has gone through, right? It's gone through a pretty precipitous fall since you put in these 2022 pivot highs. So huge run up, basically a big fall. Now you're bouncing off of a higher low. So the way the rest of the commodity complexes are running, you look at nat gas. Nat gas went through a huge bottoming phase and now has broken out. I think wheat is shaping up for yet again another continuation move higher. I think that wheat is probably going to look to test 690 and then potentially even $8. I think $8 isn't a reasonable target based off of this near-term momentum. But we just want to be mindful that nothing continues to go up in a straight line. There will be some pullbacks, but I think that $8 is probably your next target on wheat. And again, that's still showing and aligning with what the DBC ETF is doing. I still think that commodities across the board are showing signs of strength. This DBC commodity ETF is obviously having a little bit of a short-term breakout out of this chart pattern here. Take a look at that. On the monthly chart, pivot high. You're trying to break out right now on the monthly chart, also forming a weekly bullish pattern. So I still think that you have to lean bullish on commodities at this point in time. They're showing us a lot of healthy patterns in this region, and therefore you have to still favor them on the long side. Looking at corn, let me just pull corn up on my other screen. Another commodity that's also trying to break out of a basing formation. So what's interesting about corn, and I'm going to wrap up the stream. So if you guys have any final thoughts, please put it in the chat box and we'll look to answer those questions. But I'm going to wrap up the stream in about 5-10 minutes. So final thoughts. Corn, trying to put in a bit of a daily chart bull flag. What's very interesting about this price action is you're now sitting right at that daily 200 moving average. So it's coming from a depressed level. Corn trying to get above the daily 200 moving average. So I think that just like how natural gas ended up cutting through the daily 200 moving average like a hot knife through butter, it's probably also going to do the same sort of thing. So take a look at how natural gas, there was really no consolidation at the daily 200. You just had a sheer momentum move into that breakout zone. So the fact that corn is actually consolidating and putting in a pattern, a bullish pattern here, it does favor that you're probably going to have a pretty explosive move through this area. I think once you get through that area, really you're looking at, let me just see the weekly, the monthly. Just give me 1 second, guys. You're really looking at about 505 as your next target, 505.80. That's your next Fibonacci retrace level. And you can clearly see there is a potential for a inverse head and shoulders to be forming. If we calculate the upside target of that inverse, and you have a really sizable left shoulder here, but if we use, say, this is our shoulder pivot, obviously our head, this is looking like a fairly decent clean pattern developing here. And if we calculate that target, let's just do the math real quick. This is just rough calculations. You're looking at a move to about 550 off of this daily chart breakout. So corn, and again, another commodity chart that is kind of backing up the thesis of DBC and other commodities going higher. So hopefully that helped there. Hopefully that helped. All right, I think it's also important to talk about XLK since that's our technology-based ETF. XLK, what's interesting is it had that big daily chart reversal. Another ETF that is into some interesting levels here, putting in that divergence. Again, you've had a stellar, look at that bounce on the XLK. 1, 2, 3, 4, 5 consecutive weeks of upside pressure. Right now, again, you're putting in that bearish divergence on the RSI. So I still think that this is a sector that can pull back, but it's probably only going to maybe happen once NVIDIA goes through its split. I think we need NVIDIA's to start declining before XLK starts to see any sell side pressure. All right, on that note, I think I'm going to wrap it up here. Daisy May asking my thoughts on Ulta. We'll look at Ulta. We touched base on this one in the live day trade room. I think one of the viewers, Georgiana, asked about it, as well as I think Mindfulness Meditation has asked about this ticker before. But we've discussed this name. What's interesting about this ticker is that it is breaking some pretty key technical support on the daily and the weekly. Weekly chart, you're losing this weekly 200 MA. Let me just pull up some other time frames on my other screen. So daily chart, extreme oversold. You do have finally a positive divergence on the daily chart, so there might be a bounce area here. Weekly chart, again, busting through that weekly 200 moving average. Still no divergence on the weekly chart, which means that you could head a little bit lower here. Monthly chart, you're hitting the monthly 50 moving average. You actually got a bearish close below that on Friday, but you're hitting that monthly 50 moving average. On the 3-month chart, your 20-month moving average on the 3-month chart is sitting at 364.33. So this is a name that, yes, it could get a dead cat bounce here. You certainly got an extraordinary one once you went through a similar decline. But since we've kind of rejected off of a double top, I think Ulta might go to 350 before I buy. I'm looking at this 50% retrace. I'm looking at this previous high pivot waterfall sell-off. You have a lot of bottom wicks down here. I'm looking at a buy zone around 350 on Ulta. So hopefully that helps there, Daisy May. Thanks, Michael. You're welcome. All right, final thoughts here. Let's just throw on this heat map. We can discuss a couple things. So, I mean, you saw pretty bearish action for the week. If you look at the broad market on the week, you see a lot of sell-side pressure across the broad market. It was really just a handful of mega cap companies, Microsoft's, Meta's, Google's, Nvidia's, Apple's, Eli Lilly's, the heavier weighted stocks, the Walmarts, that saw upward buying pressure. But across the board, you know, when you have Berkshire Hathaway, another leading name that has exposure to really every company in the market, or not every company, but the important ones, that was also down on the week. So I still think that there's a scenario where we could see continuation selling into next week. Obviously, it is a shortened trading week, but as of now, with Nvidia still being strong, it could help lift the semis, but I'm seeing a lot of weakness in other sectors still peeking around the corner. And if you start seeing profit taking heading into Nvidia, I think that's going to start to weigh on a lot of the other XLK companies, which obviously those are kind of the companies that have shown positive performance this last week. Really everything else and in between XLK and XLC has kind of been hit. On that note, thank you all for tuning in. Hopefully this analysis has helped, and hopefully we'll be able to see you on the charts a little bit later. Again, Monday the US markets will be closed. I'm watching to see how crypto reacts around the 69K level, which will be pretty important. Thank you all for tuning in. Please check out tradingcapital.ca. If you're interested in my membership and swing trade alerts, members, I will be having that position table updated and working as we work through the coding, since Squarespace went private a few days ago. But again, on that note, thank you all for being members, and we will see you on the charts a little bit later. Everybody else, enjoy the rest of your weekend. I still will be doing a members daily analysis video recap, so expect that probably to be done maybe tonight if I have time, but most likely between Sunday and Monday I'll have the daily analysis video done. Take care, everybody, and we'll see you on the charts a little bit later.